All right, good evening once again, and welcome to this June basic course. My name is Reka Banobo, and I'm the administrator of Jfbc Academy. All right, so like I said earlier, this course is a fast track basic education, and it's going to be giving you a foundation to the Forex market. All right. This will be a foundation to your Forex journey. It's not going to be giving you everything you need to know to become a professional or a profitable trader, but it will give you a foundation to work on where you begin to develop yourself and to get better. Now, after this course, the next course we'll be doing would be a basic and advanced course. All right. And with that, it will be intermediate and advanced. And that would be for those who have passed through basic, that will be attending that, because you need to have an understanding of basic before you can attend the intermediate class. Okay. All right, so course outline, we'll be looking at some of this, and in the course of the 8 days, because we'll be running this 8 days, so we'll be doing Monday, Tuesday, Wednesdays, and Thursdays for the 2 weeks. Okay, it's a total of 8 days. So today is day one. After today, we'll be having 7 days left. So uh, these are what we'll be looking at. The first will be a broker. Who is a broker? We'll be looking at instruments. What are instrument? Trading session, spread, leverage, trading window. All right, balance, equity, margin, free margin, margin level percentage, margin call, candlestick anatomy, risk management, pips, lot size, take profits, and stop loss, break even and trailing stop, trends, support and resistance, types of analysis, where we have technical analysis, fundamental analysis, sentimental analysis. Then we'll also be developing a trading plan, and finally a trading strategy. So at the end of this journey, you'll be provided with a trading strategy that you don't need to do any analysis. All you just need to do is to wait for what we call confirmation. All right. Now, this strategy will be given to you. It will be a mobile strategy to be on your phone, and every strategy has a condition. Your own would be to make sure that you wait for those conditions to be met before you take a trade. If you are able to follow this and you wait for every condition to be met before you take a trade, then congratulations. At the end of the day, out of you take 10 trades, you should be able to win 7 to 8 of such trade, having waited for all the conditions to be met. All right, so we'll be diving first into the history of Forex. Now, there was a flyer that was dropped. It captures what we'll be looking at today, and I think there are about 6 bullets. So we have the history of Forex. We have what is traded in Forex. We have broker. We have instruments, okay? So those are the things we'll be looking at to start with. So Forex actually started with this bartering system and later moved to commodity system. So what is battery? Battery, I believe you must have heard the word trade by barter, okay? Now, trade by barter is exchange of goods and services. Now, in the days of old, especially the one we can relate to, if you read the Bible, the history of the Bible, you can see that there were a time that people exchanged, services for goods. All right, and probably a goods for goods. So you produce cassava, and the other person produce something else. You need cassava, the other person need cassava, you need what that person have. There is an exchange system, and that is how exchanges were made. Then gradually the system developed to what we call the commodity system. All right, now, what are commodities? Okay, so you see the cowries, the checker, cocoa, and yam. Same Bible is where you must have here, 10 pieces of silver, a shekel of, you know. So these are actually exchange system. That's how goods and services are exchanged. Then we gradually move to the coin system. Now, the coin system, now these coins are made of electron. Now, if you see those round coin, we used to have coin here in Nigeria, but we no longer have them. But the UAE, the US, you can't do without coin, okay? So those coins actually came very early and they are made of electron, okay? So those coins are in different values. So the value of each coin determine what you can use it to get. So gradually, the system moved to the paper system invented by the Chinese. All right, it was called the Chinese paper money. And these are certificates or notes. Now, these notes represent gold in store. So for those persons who have gold in store, so when you have your gold, the gold are banked in a store, you are issued a certificate that is equivalent to the gold that you have. So you can begin to use those notes to buy, all right? You can begin to use those certificates to buy. When you use them to buy, someone who is handling the notes can easily go to the gold store to exchange that note for the gold. All right. It's either the person want to preserve the gold again and collect a certificate, or the person want to hold on to the gold. Then we went to the Bretton Woods system, which is what we are still operating today, managed by IMF. Okay, and USD was chosen to replace gold as the world reserve currency. Okay, as the world currency reserve, which is managed by IMF. So IMF lend money to countries who needed money to keep them from printing money. Okay, so this is gradually how we moved from battery to what we have today, right now. So USD, as you see, is the number one currency because it was chosen, all right, by the Brentwood system for it to be the reserve currency. So let's go to the World Bank. Now, the World Bank, they lend money to new developing countries that wants to expand and improve their infrastructure. Floating system. Now, it is not backed by any currency or anything of value. It is not influenced by the government. Demand and supply govern the forex markets, and we have participants. Okay? Now, the IMF, International Monetary Fund, all right, manages the system, and that's where you hear World Bank. Okay? Um, Participants who play majorly are the you have the England, the USD, Eurozone, Canada, and Australia. Okay. Now, these are the countries, all right? Then we now have the market participant. When we talk about the market participant, those who play in the market, those who buy and sell, all right? Now we have the government. Now, every government have a central system of managing their money, and that's why we have central bank. Every country has a central bank, okay? Every country has a central bank, then they have different names, okay? We have the government, like I've mentioned, then central banks, financial institutions, okay? Financial institutions, the banks, they are financial institutions. We also have other institutions like, what do you call them? Uh, there's a particular insurance. Okay, so those insurance are actually they are also financial institution. Now we have hedgers. All right, what does hedgers do? Hedgers are actually institution that manage funds for company. Now, how do they manage these funds? They hedge against inflation. Okay, so when companies give them their money to manage, the aim is to avoid, the falling, as in the depreciation of whatever money they have. So they hedge against inflation. Then we have speculators, and finally we have the retail traders. Okay, now retail traders, this is where you and I fall. I'm a retail trader, you are a retail trader. But these banks, the government, the financial institution, the hedgers, they are big players in the market and they can move the market. But for you who is a retail trader, you don't have any say in the market because you can't move the market. You don't have enough money that can move the market. But these banks, these financial institutions can come together. A three or two or three banks can call themselves to say, we need to move Euro USD. Okay, so they can maybe pump like 5 to 10 billion dollars into Euro USD. What do you think will happen? So whatever they pumped in, if they are selling, the market will tilt in that direction. And if they are buying, the market will tilt in that direction. Excuse me. Sorry, that was a small distraction. Okay, so now that is moving the market. So for that reason, when such happen, it disrupts whatever technical analysis you must have done. Maybe you are buying, you are selling, all of a sudden you just see one long candle, pium, pium. All right, that is what has happened in that market. So for retail traders, since we don't move the market, that is why we trade with the use of proper risk management. Okay, now as a retail trader, you want to make sure that you use what we call stop loss. All right, and you put your take profit as well. So what is stop loss going to do for you? Your stop loss is saying that I want to buy. You actually you went into the market to buy. But for one reason or the other, the market is not buying. Instead, it started selling. What your stop loss is going to do is that, okay, I actually wanted to buy, but because the market refused to buy, please, when you get to this level, this is the much I can afford to lose. Take me out of the market. That is the work of your stop loss. But if you do not have stop loss, that market will continue to go down until your account is liquidated. So when your account is empty, the trade stop running. But because you have what we call stop loss, the stop loss will just take you out of the market and a fraction of your account will be taken as that stop loss. And you still have an account to trade the next, to take the next trade. All right. So we do not predict the market. We just follow what the market movers does. All right, so that takes us to a broker. So who is a broker? Now, this is where you and I as retail traders come. Now, the government, the central bank, those institutions, they don't need a broker because they are big enough to play directly in the market. But for you, who is a retail trader, you need a channel, all right? You need a link to connect to the global financial market. And since you cannot connect directly, you need a link, and that link is called a broker. Okay, now before I go into, reading or explaining what is here, let me just use our local level of interacting with brokers. Now, so if you have changed money with Aboki before, so let's assume you received dollars. Maybe your auntie, your uncle sent you dollar from the US or sent you euro from Europe, or GBP, which is pounds from UK, and you want to change it. You know, our approach, the people we know to change money around is the Aboki, right? Okay. So what those Aboki do, what they do is called, what they are doing, they are functioning as broker. Okay. Now you take your money, your dollars to change into naira. When you receive naira, you receive dollar, you go and change it from Aboki so that you can get naira to buy whatever you want to buy. Okay? What you have done is you have actually participated in the global financial market, but what you did in this case is the physical market. All right? And the Aboki, what he has done is standing in the gap as a broker. Now, one thing with the broker is that the broker does not lose whether you are selling or buying. So if you are changing dollars from Aboki, you want to change naira to your dollars to naira. So let's assume the Aboki is you are changing your dollars and you say, okay, we are buying from you at 1,350. Now, same place, same Aboki you sold to 1,350, that same moment, someone is coming to buy that same dollars. Aboki is telling the person that is 1,400 because the person is bringing naira to collect dollars. That is the exchange. It's either you are bringing naira to collect dollars or you are bringing dollars to collect naira. So that's the exchange. Okay? So whether you are buying or selling, the Aboki will make money. And that money the Aboki is making is what is called spread. So we're going to we'll get to that. We'll get to spread and you begin to have a better understanding of this thing. So who is a broker? A broker, a forex broker is a financial service company that provides traders access to a platform for buying and selling of foreign currency, also known as forex or FX trading. In the forex market, currencies are traded in pairs. Okay, so now what this is trying to explain to you is that you don't trade a single currency in the forex market. Then what you have done is not trading, it's not an exchange. Now, two currencies are paired. So you are buying one to sell one, or you are selling one to buy one. So you can't just go to the market and just sell euro. No. When you sell euro, which one will you collect? So there must be an exchange. So what you do, what you trade in the market is called currency pairs. So the currency pairs, they are paired like this. We have the Euro USD, GBP JPY, GBP USD. We are getting there shortly. All right. And brokers act as intermediary between retail traders and the interbank system or other liquidity provider. Apart from currencies, other instruments like commodities, CFDs, cryptos, bonds, and stock are also traded on this platform. All right, so that takes me to instruments, okay? You know, on my list, when I shared what we have as topic today, you also have what we call instrument on the list, right? Now, instruments are actually what is traded in the market. So we have assets, we have instruments. Some asset class can be classified as instrument. They can also be called assets, okay? While some are instruments standing alone, but that is advanced. You don't need to know all of those ones for now. What we are here for is the basic. Okay, so when we talk about instruments, we have commodities. Now, what are commodities? Commodities are things like gold, all right, agricultural produce, all of those things. You can maybe carrots or cassava and all of that. Most of these things are sold in the all these agricultural products and all of that. Now, gold also fall here, but gold actually is separated. We call them precious metals, okay? Gold is separated, but it's also still commodities. So we have CFDs, which is contract for difference. Those are big names. You don't need to bother your head about them yet. We have cryptos. We have bonds. Okay. We also have stocks. We all of these guys are actually traded in the platform, which is the same Forex platform. Okay. So what is traded in Forex? I have just explained everything. Yes, basically the foreign exchange. Okay, now we're foreign exchange. We're talking about the currencies, but not only currencies are traded on this platform. I have just shown you every other thing that is traded. Okay, over time you begin to know all of this. But basically, at the foundation level, you need to focus on Forex and try to understand the fundamentals. With these, you now begin to advance into the other ones as you grow in the system. So first, we want to look at the currencies. Please, it is now time for you to take out your pen and your paper, your note rather, and begin to write. Okay? Because this is where it gets more interesting and harder. Now, from this level, now this place will be giving you assignment. I'll be giving you assignment tonight that you will drop on the group before the next class tomorrow. So this is how we begin to know those who are serious, those who are ready to learn. All right. I know that between everybody who is here now, we also have some people who have been Forex, who have been in the system, who are not new entirely. But we also have people who are really new. So we want to make sure that we tag along and learn these things very well. So the first thing I want you to make sure that you capture very well is this thing, which is called hierarchical order of currencies. Hierarchical order. When we say hierarchical, it's hierarchy. You know, when we say something is in hierarchy, so which means they are in class. There is one that is higher than the other, all right? There is one that is higher than the other. So in this Forex market, we have the hierarchical order of currency, and this hierarchy are in 8. Now, these first 8 currency are the major recognized currency. All right, these are the major currencies. Okay, every other currency are minor, but these 8 are major currency. Now, the first one is euro. The second one is GBP. The third one is AUD. AUD is Australian dollar. All right, GBP is Great Britain pound, while the first one, euro, is actually euro for the Eurozone. Okay, that's for Europe. Then we have the NZD. NZD is New Zealand dollar. The number 5 on the list is USD, which is United States dollar. Okay. No, you can't stay with me now. I'm in a class. All right. Thank you very much. Go to your room, please. All right. So sorry for the break in transmission. Then we have CAD. CAD is actually Canadian dollar. Then we have the CHF, which is the Swiss franc. Okay. Then finally, the JPY, which is the Japanese yen. Now, these 8, please take note of this hierarchy. Write them number 1 to 8. These are the 8 major currencies, and this is how they are arranged. Now, you may not understand it now, but as we go on, you begin to understand them. So now, why this hierarchy? Why is there hierarchy of currencies? Now, this hierarchy has nothing to do with the value. Please take note. The hierarchy has nothing to do with the value of the currency. That euro is number 1 does not mean that euro is more valuable than pound. No. Now, the essence of this hierarchy is just for naming. Now, this hierarchy is for naming. Okay? Now, In the forex market, what is traded is currency pairs. And when you begin to pair the currencies, what you are doing is you are naming them. So for there to be correction and be uniform of these currency pairs across board, there has to be a hierarchy in arranging them. Okay? So now let's go further. So currency pairs. Now, currency pairs, a combination of two currency with one bidding and the other asking. One bidding and the other asking. So one is the one saying, I'm selling at this price. While the second one is saying, no, let me buy at this price. So that is bidding and asking. Okay? Now, currency pairs. So now let's look at this percentage. I'm coming back to the hierarchy of the hierarchical order of currency. I'm coming back because we need to dwell on that one. That's the one we use to close, all right? Okay, because I need to show you how to pair currencies, and that's how you will have the assignment I have set for today for you. Okay, so currency pairs. Now, let's look at the trade percentage. The trade percentage. So, traded currency. Now, the USD is the most traded currency across the global financial market because the USD is paired with every other currency. Every currency is paired with the USD. Okay? So number one, USD 85%. Then we see the next one, Euro. Euro is 39%. The JPY, Japanese yen, 19%. GBP, 13%. AUD, 8%. CHF, 6%. Then the Canadian dollar, 5%. Now, others are 2.5. So others is where the Nigerian naira fall. That's where the South African rand fall. That's where the Mexican peso fall. That's where every other currency you know that is outside this one, they fall within 2.5% of the volume traded in the financial market. Okay, so now what's one thing you need to know? Something affects the rise and fall of this currency, why the currency are stable, they go up and down. So there are things that function in that manner. Now, if you could remember, our naira was at a time 460, 360, and so on. But today we are 1,000 something. So what has happened? All right, so things that affect the economy, all right, because if the is what affect the economy that drive your currency. Okay, so the first of them is politics. Then we have interest rates, natural disaster, terrorism and war, unemployment, import and exports. Okay, so these are, things that affect the currency itself, because when this thing affect the economy, it plays out in the currency of that particular country. So now we have come to where we want to play today now, which is the currency pairs. Okay, so now I think I want to let me bring out let me see, whiteboard. Wanted to use board. Okay, so Now, first of all, wait, let me go back to this. Okay, so I'm back here where we have the hierarchical order of currency. Now, I want to show you how this currency hierarchy play, right? So please pay attention. Now we're talking about naming of these currencies now. Okay? So we're talking about naming. So now euro is the first on the hierarchy. So what it means is that euro will always be in front of any currency it comes across with. Hello? Euro will always be in front of every currency that it comes across with. What it means is that euro can never be behind any currency. So let's see what happened here now. So the first will be euro G. The first will be, no, let me change the color. Let me change it to probably red. Okay? So the first will be euro GBP. Okay? I wanted to continue on this guy, but it's not it's closed, it's not opening again. Okay, so let me just go to the front. So Euro GBP. Now the next one, now what I did now is to pair this Euro with GBP, right? So you can have Euro GBP, Euro AUD. No, Euro AUD is the next one after GBP. Then the next one will be Euro NZD. Okay? After Euro NZD, the next one would be Euro USD. Euro USD. After that, the next one would be Euro CAD. Okay? After that, the next one would be Euro CHF. The next one will be Euro JPY. Okay, so this is for Euro. Okay, now this is for Euro. So, which means if you look at all these pairs now, Euro is always in front. Euro cannot be a quote currency. Now, what is a quote currency? We have a base currency and quote currency. Now, the currency in front of every currency pair is called the base currency, okay? While the one, so this one now, now this guy is not like the way it used to be. Okay. Okay, so this is this guy. Then we have this guy. Okay. So now this is the base. Okay. While this one is the quotes. So for every currency pair, we have the base and the quotes. Note, the one in front is called the base, all right? While the one behind is the quote. Now, it's also called the bid and the ask, okay? Sorry, 1 minute. All right, so now that we have finished with euro, so you can see that for euro is always in front as the base currency. So euro can never be behind. Euro can never be a quote currency to any other currency. Now the number two here is GBP. Now GBP can never be in front of euro. You already saw it, euro GBP, right? So now the next one now will now be GBP AUD. Now we have GBP NZD. We have GBP USD. We have GBP CAD. We have GBP CHF. We have GBP JPY. Okay, so you can see here now that GBP is in front of all these other currency number because it's the second on the hierarchy. So which means the only person that can be a quote currency to GBP is euro. Euro is the only currency that can be a base currency to GBP. For every other currency, GBP must be the base currency. Then that takes us to number three, which is the AUD. So for AUD, you have AUD NZD. You have AUD USD. You have AUD CAD. We have AUD CHF. And finally, we have AUD JPY. So you can see now the hierarchy now is beginning to play out, right? Now it's beginning to play out. So now, the same way we have arranged these guys like this, what it means is that AUD can never be a quote currency to anything outside GBP and Euro. So it's only GBP and Euro that can be in front of AUD. Aside that, every other thing you want to see AUD with, AUD must be the quote currency. Is it clear now? AUD must be the quote currency. Now, the next will be NZD. So after NZD, I will end it there because it's the same thing. It applies to every other one. So for NZD, we have NZD USD, NZD CAD, NZD CHF, and NZD JPY. Okay? So, what it means is that NZD can only have the first three as quote currency. It cannot have anything below as quote currency, as base currency. That is, NZD can only have the first three as base currency, while anything below it must come as quote currency. So that's the same thing applied to all of them. So for USD, you have USD CAD, USD CHF, USD JPY. For CAD, you have CAD CHF, CAD JPY. For CHF, you have CHF JPY. While for JPY is always the quote currency. Okay? Why? Now, this guy is called universal quote currency. Universal quote currency. So this guy is a universal quote currency. Universal quotes currency. Okay, it's a universal quote currency. What it means is that it cannot be a base. I mean, it cannot be, yes, it cannot be a base at any time. It can never be a base. Is always a quote. That is why it is called universal quote currency. While euro is the universal base currency. Okay? Euro is a universal. Okay? So this is it. So now this is how to pair your currencies. So now what we have done is we have paired what we called we have paired all these currencies, all these major currencies, we have paired them. Now, after major currencies, there's something else we called major pairs and minor pairs. So for currency, we have major currencies, we have minor currencies. Okay? So any currency that is not in this 1 to 8 is a minor currency, while these 8 are called major currencies. All right, so let's proceed. We're almost through. Okay, so now, okay, oh, this guy is transmitting. Okay, so I think I may have to clean it. Okay. All right. Okay, so let's go further. Now, let's now look at the currency pairs. Okay, let's look at the currency pairs. Now, we have major pairs. Now, what are major pairs? Now, major pairs is a major currency paired with the USD, except the USD JPY. Sorry. Major pairs are all major currency paired with the USD. Those are major pairs. Is somebody getting it? If you have any question, please put it down. All right. We'll definitely be coming to it. Okay. If you have any question, put it down. You have opportunity to ask me question for 30 minutes. It's for question and answer. You ask and I will respond accordingly. Okay. So I'm telling you that major pairs are major currency paired with the USD. So not every of the major currency paired together are major pairs. No, but only the ones paired with the USD. Only the one paired with the USD. Oh yeah, go. Sorry, excuse me. What happened to your own toilet? These children, go now. Oh yeah, go. So now this is now, I've just said that major pairs are major currencies paired with the USD. Please take note. Now, say those that contain the USD, not everyone that contain USD, but the major currencies, that's the eight. Out of those eight, paired with the USD is major pairs. Now we have minor pairs. Okay? Minor pairs are any of the eight currency paired with the JPY. All right? The JPY, any of the major currencies paired with the JPY is called a minor pair, except the USD JPY, because the USD JPY is a major pair. Minor pairs are currencies paired, are major currencies paired with the JPY, except the USD JPY. Okay? While finally, we have the exotic pairs. We have the exotic pairs. Now, what are the exotic pairs? The exotic pairs are major currency paired with an emerging economy. Now, exotic pairs, please, I hope you are writing. This thing is not written anywhere. Now, I'm saying that exotic pairs, all right, are major pairs paired with emerging economy currency. So let's see. Now, what are the emerging economy? Look at this one. Say a major currency that is paired with an emerging economy include, so this is the Russian Federation Ruble. So you can have USD, that is USD ROUB. Now South African Rand, USD ZAR. Okay? So these ones are called exotic pairs. All right? So anything outside the major and minor pair, they are called exotic pair. Now we have the USD NGN. That's USD paired with Nigerian Naira. It used to be traded some time ago, I think when Naira was still very good, but now you can't see it on any chart right now because Naira has slept off drastically. So we have the Mexican peso, we have the India rupee, the Singapore dollar. All of these are emerging economy. So when a major currency is paired with them, especially the USD, because it's only the USD that practically USD and Euro that is practically paired with this one, but USD mostly. So we call them exotic pairs. Okay? All right, look at it here. Exotic pairs, exotic currency pairs. Okay? So right now, I think this is where we'll call it a quit for today, and we'll end the session recording so that the recording will not be too long before we go into the questions and answer session. Now the slide continue. I don't want to open the next slide for you because that will be from tomorrow. Okay, that will be from tomorrow. So this just say active column. Say treat currency pairs like dating or cutting. Now, all of these things are as you proceed. Now, when we say treat currency pairs like dating or cutting, is like when you are dating a woman, you want to date one woman at a time. Is it not so? You are cutting one woman at a time. Now, the reason for this as a newbie is that when you pick one particular pair and you want to start, trading it, if you pay attention to it, you have a better understanding of how this particular pair moves, because each of these pair have their movement are different. Okay, so if you study a particular pair over a period of time, you should be able to tell the movement. You should be able to tell what happens next. You should be able to tell if this thing happened this week, this is what I'm expecting to happen next week, because you must have paid attention to it such that you know it back and forth. All right, the same way you know your wife, the same way you know your girlfriend or your boyfriend, because when the attention you pay to each other, that is the same thing here. All right, so pick a few currency pairs, not more than 3 to 5, to study. Study only those markets until you become familiar with how they act. All right, then keep track of what they do. Keep a trading journal. Start with the most common pair. Remember, jack of all trades does what? Is a master of none. Thank you very much. So this is where we end today's session, and right now we'll be going into question and answer session. But before then, I will end the recording so that our our recording is not too lengthy, because when it's too long, people find it difficult to watch it completely. All right, so let me stop recording. Okay.